Hi, Kristi Sullivan here with Sullivan Financial Planning. Thanks for tuning into my video. Today's video accompanies a blog that I did about what might happen, the provisions of when the Tax Cuts and Jobs Act may sunset in 2026. We don't know if that's going to happen or not. See earlier blog. But what are the major provisions for people's personal taxes that you may want to consider planning for just in case the tax law sunsets as planned? I'm not going to go through all of those in a short video. You can read the blog for that. But I would say probably the biggest one is, well, there are two. One of them, one of the biggest changes is the idea that the standard deduction would go down quite a bit from where it is currently. And the reason the standard deduction being higher is such a big deal is it makes a lot fewer people. I think it's like 62% of people who used to itemize their taxes to get all their deductions don't right now under the higher standard deduction. So if you're one of those people who the lower new standard deduction will be less than what your itemized deductions would be, that'd be like charitable gifting, mortgages are pretty common, that sort of thing. You may want to make sure that you get an accountant lined up because maybe your tax has been very easy to file the last 8 or 9 years with the standard deduction, but it might get more complicated if you have to go back to itemizing. So again, accountants are hard to come by these days. So you might want to start looking for someone now if you think you might want competent help to help you prepare your taxes going forward. So that's one action item you could be taking now, just in case the tax law sunsets. The other one has to do with estate planning. So right now, a couple can send down to heirs estate tax free about $26 million between the two of them. And if the Tax Cuts and Jobs Act does sunset, the estate tax exemption goes down to around $14 million for a couple. That's a big change. And it really could affect those, especially who have maybe a closely held family business or something like that, that under the $26 million valuation could pass estate tax free down to the next generation, but at 14 million would not. And you might have to have some extra liquidity built into your estate plan in the form of maybe life insurance or more savings or something to ensure that that family business can pass down to the next generation without being sold to pay for estate taxes. So I would say that those are the two biggest ones that I wouldn't say worry about, but certainly plan for. So the plan for would be using an estate planning attorney, maybe in conjunction with an insurance agent or your financial planner, to make sure that any assets that fall between that 14 million and $26 million difference can pass easily without estate taxes down to the next generation if you are indeed in a situation where your estate is around that size. So get a CPA and probably get an estate planning attorney if you don't have one already, to at least be ready for what might happen if the Tax Cuts and Jobs Act does completely sunset for 2026. I hope this was helpful. Have a great day.